All right, everybody, let's go over some trading opportunities that were available today. I think it was here. Okay, so this was one of them. First, the market started pulling back, and it gave a little one swing move. One swing or two swings, however you want to see it. It wasn't a great move, but the other side came in. So sometimes you have like a bull signal and a bear signal. So this is a situation, and typically the side with trend wins. So what you had here was this heavy buying activity right here. 1.9 times average up volume, biggest in 13 up waves. And when it pulled back, you had this thrust. And that thrust initiated this crazy move up here. Which finally, went down. But it was the end of day move that was, it was a good move, and I'm just going to go over that without going into all of the other trades. So this right here was the move, and it was at the end of the day. And this, you could see the planning. You can see the campaign, as Wyckoff would say. You can see supply overtaking demand and the distribution, and that's what's important, right? The other stuff is not really, not important. If you can't take advantage of it, it's not important. All right. So I'll show you how. All right. 1 second. Where was it? Oh. All right. So here. Right here, you had a strong selling wave. All right, but it's not just the wave. If you look closely, we're in an uptrend here. Right, the market rallies, pulls back, and goes up, up, up. All right, so it's a counter trend from the supply earlier on in the day. So what's important here is when is this demand going to encounter supply? That's what I have in mind. I don't really care about too much. I want to see, get into a level and demand encounter supply. And from that low, from the low which initiated the counter trend, from that low goes up, 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 and right there, right there, this print is the biggest print since the start of the counter trend. Since the start of this counter trend, this is the biggest print. Right there. On the ES. All right? So, as I explained many times, it's only two things to focus on. One is high volume print with little or no follow through, and the second thing is effort. What do these two things tell you? They tell you, in this case, that demand has encountered supply. Demand has encountered supply if you have effort or you have a high volume print with no or very little follow through, and there is a reversal, or there is ease of movement to the other side. down. All right. So over here, as demand encounters supply, the thing is they can continue. Why? Because demand can absorb supply and continue higher and make a new high. A very obvious thing that can happen, right? But instead of continuing and absorbing and all of that, what it does is it takes out the low of the column, and on the wave chart, it makes a lower low with heavy selling, 1.8 times average down volume. That's all I need to see. Because it tells me that demand cannot absorb supply, right? It doesn't absorb supply, and instead it makes a lower low. Instead, there's heavy selling. So as price went up, demand encountered supply, and supply overwhelmed it. Supply overtook demand. Supply was greater than demand at this point. At this point, supply is greater than demand, as confirmed by the down move preceding it right here, goes down. On heavy volume, big range, not that big range, but this above average, and 1.8 times average down volume, that's pretty okay. All right. After that, you had to really be sharp, because after that they did one pullback. It went down, and then there was a slight upthrust. So if your stop is not at the right place, you're gonna get taken. So a lot of folks I know, what they're going to do after they see it go down, they put their stop right here, only for the upthrust to occur. This is an upthrust of that high. This is an upthrust of this high. So you have to know where to put the stop. I was confident in the trade because I saw this. And I saw this reversal. And this reversal here. So, I mean, they could have reattempted and absorbed and broken out. Absolutely, no question. But, I would think that they would go a little lower before they go higher. So, that's it. After that, the market puked. The other indication, while I was doing all this, I noticed that gold was going up. So gold will not, go up just willy-nilly. When I want to see some risk-off markets go up, and gold is good. Gold going up. So it told me that something's about to happen, because gold at that time of day won't go up. It doesn't work like that, So, all right. So what is the lesson to be learned? On pullbacks, on uptrend, downtrend, whatever, to quantify reversal, whether it's a trend reversal or a pullback reversal, you want to see one of two things. One is effort, and the second is high volume print with little or no follow through. In both situations, they have to be preceded by an ease of movement to the other side. Ease of movement to the other side just means it's a wave. It's it goes the other way. That's all. All right, like I'm showing here. All right, see this? This goes down. So up here is where the high volume activity. Where the hell is my mouse? This thing, this high volume, this distribution was right up here, and as a result of it, price went down. Ease of movement to the downside. Here you can see that it makes a low that makes a lower low than the prior column. So that qualifies as ease of movement. I would prefer that, over here there would be volume. There is some volume, but I would prefer the volume be bigger and all of that to be bigger, right? This distance to be bigger. But at least it's on the other chart, the bar and the wave chart right here. It's there. So I'll just go with this. But I prefer to have a a thrust down. Then I know that I have more certainty. But this is enough, especially with this 1.8 and all that. After that, all the market is would tap once, tap twice into that same selling area and puke. And that's it. It is done. All right. Now I'm gonna go over Euro. This is a like sometimes I get triggered by this market because it does a lot of crazy stuff. So you'll see the Euro. All right. Now I'm going to show you what was going on here, where they started accumulating and doing all of that. All right. So first thing is this area right here. Oh my God. So price is going down, bang, bang, right here. What do you see? High volume prints. Is there little or no follow through? Yeah, there's no follow through. So this is where that initial, it's either short covering or what is it? Preliminary demand. Right here, you see these bars? This volume picks up. Okay, so something's going on. After that, they do a shakeout right here. This is a shakeout or a climax or whatever you want to call it, but this is the terminal move. Okay, after that, you have the ease of movement, which after this, I know the market is going to go up. No question. No question. They were not going to commit to the biggest volume in 66 bars. This is not normal. This is buying activity. Biggest volume in 66 bars comes in right here. Okay? After that, this is the tricky part. After that, they do a spring. Instead of holding the low, they did a spring of the low. All right, so if you get in, you're going to have to get stopped out and re-enter. It's not an easy thing to do, but that's what happens. Okay, so this is you can call this a change of behavior right here. You call this a change of behavior or a sign of strength right here. Right? Y is strength. It's buying right there. Change of behavior. What's the behavior? Buying activity. It's very strong. That's the change. As it comes down, right here is where the demand is stepping in at the low. It does a spring, but demand steps in. How do you know? Look at this. See this? Volume, more volume, less. You know how the diversions are like that and like that. Look at that. Volume increase, price decrease. That's your diversion. All right. That's the effort diversion. Well, effort reward, volume increase, distance decrease, or even if it stayed the same, that's your diversion or effort diversion or bullish effort diversion, whatever. All right, so there's your effort. And what's the other indication? High volume, little or no follow through. That means what? It means demand, supply has encountered demand right here. So it had encountered demand here as well. The difference here is that you have a bullish rally in the background. You have a bullish rally in the background. Over there was just preliminary demand because why? You have no bullish rally in the background. You just have some buying, initial buying. All right, so this is the effort and all of that. So they accumulate more over here, and then take price higher. And now you have again you have some high volume prints, little or no follow through, and continues to go up. But this is the very clear. It's at support, support. Volume increases greater than last 4 This doesn't do anything. After that, you have ease of movement. How do you know? It takes out the high of the column. It takes out the high of the column, bang. And on the wave chart, it's very clear why the wave chart has the biggest biggest wave from this. From this, you have the biggest wave in 11 waves. 11 waves. This is the biggest in distance. The volume is 1.7 times average up volume. The preliminary demand had 3 times average up volume, 300%. 3 times average, biggest than 10 wave the volumes, up volume. All right, and that's it. Now we'll take a look at gold. I'll show you this too. Gold, this was the bullish change of behavior. That's 2.4 times average up volume, biggest in 49 up wave, no question. That, and the biggest in 22 waves. That this is buying activity, no question. And then it just goes all the way down to test right here. So let's take a look at gold. So gold, coming down, pulling back, down. Do you have any indications of effort? No. Some ease of movement, but this is the effort right here. This print 23 is the biggest print since the pullback. Since this pullback, this is the biggest print. So this entire move, this is the biggest print. Now what do you need? You need ease of movement. Do you get ease of movement? Yes, right here, bang. What is that in terms of the wave chart? 1.7 times average up volume, biggest in 9 waves, offering the pullback test. Yeah, that's it. It went up. Okay, so this is the print in gold, but these prints don't mean anything unless there's ease of movement and you have location. You need to have location and know what you're doing. So this rally told me there's there's a change of behavior to go higher. Then this all time manipulation, only to dip low to this area for the low risk entry, and then for there to be effort with a large print. The effort really isn't that much. It's this print that is more clearer because it's the biggest print. That print is the biggest print since this. So since the change of behavior here, this is the largest print. So, and it's coming in on the pullback. You think someone's buying the pullback, and after that you have ease of movement, bang, entry, and you get one move, but I think this is going higher. I don't know where. It's already a resistance. We'll see if it breaks through. All right, so I've explained a couple of things. When you have a rally, what are you looking for? You're looking for a pullback. What should happen on the pullback is demand should enter. How do you know there's demand? 2 ways. One is high volume prints, no follow through. Second is effort. These are the 2 ways, quantifiable, that someone is taking the other side buying the pullback. And both effort and ease of movement need to be followed, effort and high volume prints need to be followed by ease of movement to the other side, that takes out the high of the column. So in this case, this is effort, right? This is the high, and now you have ease of movement that takes out the high, confirming that this is effort and a high volume print, and this is demand stepping in. It's also visible on the wave chart here. All right, that's all, folks. Take care.